Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First trade is 2/3% higher, 67 higher on the Nifty.
We need to not outsource credit research to credit rating agencies, but everybody needs to conduct credit research.
That as of right now, private bodies, corporations, persons seeking Aadhaar, persons outside of the government seeking Aadhaar is not tenable.
Telecom companies, the strength to attract investments worth about 6.5 lakh crore rupees.
Markets are really volatile today as well. We saw that sudden slip in the market. Of course, we're off the day's low as far as Nifty goes, 27 points off the day's low.
On IT, even on the Midcap IT side, there has been a lot of profit booking. KPIT Tech is case in point, 7.5% down. We've seen some weakness on Hexaware as well.
Bulls erase most of the losses in late trade, but Sensex and Nifty still in the red. Midcap see a sharper recovery and the index ends with gains of over 50 points.
Financial stocks perform a tad bit better. Indiabulls Housing Finance, Dewan Housing see short covering. Others end the day in the red.
Yes Bank stock jumps 2% after the bank board asks RBI to extend the tenure of Managing Director Rana Kapoor by at least 3 months, but brokerages believe the Reserve Bank may not relent to their demands.
The Cabinet clears new measures for the sugar industry, announces a 5,500 crore rupee assistance package for mills that fulfill certain conditions. But sugar stocks sulk in trade as the industry believes it needs more SOPs.
Bharat Electronic or BEL gains after management allays investor concerns, says it will maintain 12 to 15% revenue growth for the next 3 years. Motherson Sumi ends in the red, over 2%, as worries rise after BMW warns of lower profits. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you all that happened in those 6 hours of trading in just 5 headlines. I can assure you, these days it has become a turmoil, a tumultuous 6 hours of trade, and crunching it into 5 headlines is becoming a bit of a problem. I'm Lata Venkatesh, with me Surabhi Upadhyay. Hi Surabhi.
Hi Lata. Well, relatively speaking, slightly calmer day, slightly more range bound considering the kind of yo-yo that we've seen from last Friday. Well, over the next 30 minutes, we will be talking about all these top 5 market stories, and our guests will also answer your stock-specific questions. Joining in today to do that, we have market expert Prakash Diwan and technical expert Ashwini Gujral. So thank you, gentlemen, for joining in. But before we get started, just a quick wrap-up of the day, Lata, and your sense of what we got. A bit of an uneasy calm, perhaps. Some recovery in some of the financials today.
Yeah, you could say that big falls were not there like we saw, in the past 2 days, where we had 100 points of Nifty and 300 points, 500 points of the Sensex falling. But you can't still say that there is confidence in buying. There were a couple of things that perhaps happened. A leveraged cleanup of leveraged positions has probably happened for now. That's all. All that cleaning up is over. That doesn't mean that people are still ready to buy or even have the strength to buy after the kind of losses they have seen. What was positive today is that crude did not cross 82. It was about 20 cents off 82, and that had its positive impact on other macros. Yields were off from that 8.15 levels to 8.07. Rupee was somewhat stronger. At least it got off the headlines. It is not rushing towards 73. So all this yielded calm, but that is why IT didn't do well. Because, it was its best days were when rupee was racing towards 73. Now that there's calm over there, there's probably a little bit of cleaning up of positions or probably profit taking in IT. But we have yet to see whether this market's perils are over. It was until now discounting the current account deficit and the crude issues. Yeah. Now it will start to worry whether the big DII support we were getting all these days will still remain. Yes. That question will be answered only in the days to come. Whether SIPs are continued, non-SIP equity flows continue. Those questions are yet left on the table.
Oh, absolutely. Those are the bigger issues. And of course, also what the RBI has to do, the tough balancing act. Do you raise rates or do you provide more liquidity to the market, or do you do both? But anyway, those are questions for a little later. Let's quickly run you through today's stock list as well, and just a quick summary of the action. So Nifty gainers, you had a sort of cross-section of stocks moving higher today. UPL did very well in trade. There were buyers queuing up. And the reason why the market recovered sharply in the last half hour was about Reliance, because that stock had a good run today, 1.5% on the upside. Morgan Stanley is getting quite optimistic on Titan. They think the fall is overdone. That helped that stock. Let's come to the financials. So there were quite a few stocks that were finding favor today. Indiabulls Housing Finance to start off with 7.5% higher. And Yes Bank, you could argue, yesterday's board meeting developments, perhaps with the stock falling so much, it's already all in the price. HDFC Bank, ICICI Bank, these were some of the other winners. So what was losing ground? Auto stocks have been beaten out of shape in this market, starting with the bellwether, Maruti itself. 52-week lows continue for that stock. It was down another 2% today. Tata Motors and ITC were some of the other weak links. IT, as we told you in the headlines as well, there was a lot of profit booking across the board, across the sector, whether it's the biggies like TCS or Infosys, or smaller stocks, Hexaware, NIIT Tech and KPIT Technologies as well. Quickly coming to the mid-cap action of the day, BEL, you will hear more about the stock as we go forward. Why did it rise 10%? We will just tell you that. Exide, Rights and Godrej Properties, these were some of the other smart movers on the upside. And weakness coming in for the sugar sector, and this is the big question, whether the entire sugar rally itself is now over, is all the news out, or whether this was just today's disappointment because SOPs have come in for exporting sugar, not for selling sugar within the local market. So there were, therefore, a 4 to 6, 7% drop on many of those stocks.
Profit taking in sugar like it was in IT. But let's now invite our guests to tell us what they've made of the markets. First up, Prakash, buying now?
Not yet, but getting close to that. You know, Lata, the issue with the pattern of the market is that the mid-caps particularly, anything which is beyond the Nifty 150 and the next 50, there are no takers, you know. So what we are seeing is typically if you were to sell something, you end up waiting for absorption, and by then the stock is already 3-4% down, you know, even quality stocks. So there's this whole aversion to buying anything afresh across the board. And you know, when I see those numbers from the DIs, FIs, I really start wondering, you know, whether it's fragmented buying, whether it's just a few stocks where they've built up positions, because you don't see that on the screen otherwise. You know, you ask a dealer and they'll tell you that there are no takers for some quality businesses as well. So, yeah, except for today, there was a little bit of a this thing in buzz in Reliance. You know, there's a comeback of sorts that it's made. Some of the other pharma names have started kind of smarting up. But I think it's a clear sector rotation. I think the next sector to go after in terms of short selling is FMCG and consumption. And I spoke about this on Tuesday morning as well. HUL, Britannia, Nestle, you know, all of them are looking very susceptible.
Okay. I think Ashwini, we got connected to Ashwini again. Choppy today ended with marginal losses at the Nifty level. What's your sense technically, Ashwini? Is the market settling into a range at all?
Well, you know, I don't know what settling means, but it's a pullback, and as you can see, it's a weak pullback. You know, despite crude coming off the highs of the day, you know, government helping a couple of PSU banks, there is no follow-through, and there will be no follow-through till the macro improves. So basically, what we've got today are two boundaries: 11,200 on the upside on Nifty, and 10,900, 950 on the downside. And the way to trade a range-bound market is to hope for one of the boundaries to come in, gap down, gap up, and then take the other side. If you try to trade trend in this market, you'll get into trouble. But overall, you know, the pullbacks are too shallow to write home anything about. So we'll do a lot of up and down, but by the end of next couple of weeks, we'll still be hanging around here. And then the next leg, you know, should start. So that way, it's a mild pullback, and nothing much is likely to come from it.
Okay, Ashwini, that's the market call. So Ashwini is still sounding a bit doubtful about this move today. Let's get to the second headline of the day. Financial stocks performed a little bit better in trade. The likes of Indiabulls Housing Finance and the One Housing managed to see some short covering. They ended positive, although there were a couple of others like Anfin Homes, etc., that were still struggling, and they were down in the red. Let's listen into what Rashesh Shah of Edelweiss Financial Services has to say on what he thinks will become of NBFC's credit growth as we go forward.
In the last 3-4 years, I think banks, the best part of the bank's portfolio has been their exposure to NBFCs. In fact, there is almost zero NPAs on banks giving loans to NBFCs across the board. That last 5 years, NBFCs were growing at 25 to 30% a year, and banks were growing at 8% a year. Now we are seeing bank credit growth has gone up from 8 to about 13, 14. I expect NBFC's credit growth will stabilize at about, say, about between 15 to 18%.
Okay, now that's important, scaling down growth, and that's why I think the market is also scaling down the price to book value of these shares. Okay, we have a question from a viewer on exactly one of the housing finance companies. Ravi from Tamil Nadu has written to us. He says he's been holding 1,000 shares of the company at 187 rupees. Okay, he's a buyer of 3 years standing, wants to know if he should hold or sell. What would you say, Prakash?
So I think he's sitting on a significant amount of profits.
Still 100% profits.
Yeah, close to 100% profit.
But he was sitting on 600%.
Yeah, so that's always, this is where you put trailing stop losses to make sure that you don't miss out on the upside as well. But I don't see any issues with DHFL per se in terms of whatever data is available in the public domain. But generally, the aversion to this segment could still lead to a little bit of a re-rating or a sideways or a time correction for most of these stocks. And what Rashesh Shah was saying, actually, if you hear the entire thing, it's a great nugget in terms of understanding the dynamics of the business. What he's saying is it's going to be the stronger NBFCs which will be able to continue growing, and there will be a natural evolution where the weaker ones will die. Yeah, or get probably eaten up by the bigger ones, and this happens every 3-4 years. It's a reset. So the bigger ones who have a stronger balance sheet, access to funds, and continuity of business will continue to grow, and there's no reason. So if you go with some of those names, I don't see that to be a big issue as much as what we are making it to look like, the systemic side of it and all. So I would book profits, stay away from it a bit, and then review it maybe in the next 3-4 months, because once you have the next quarterly numbers, you'll also be able to factor in all these limitations and challenges in terms of what affects the P&L with. So probably that's a good time to. The market's not going anywhere for the next 2-3 months. That's for sure. So enough time.
Let's buy later.
No need to rush in, perhaps then. Ashwini, taking your view on this, is this a sector to avoid, for instance? Are all NBFCs looking the same way? Or do you think now the fall is quite excessive and maybe, there would be some semblance? Or do you think this is just a bottomless pit at the moment?
See, definitely they can, because, falls stop after everybody who wanted to sell is out. They don't fall because somebody comes in to buy. So that way, if this is the sort of rally we have in terms of pullback, things have gone up. Like Canfin Home used to be 150, it went to 1800, then the stock got split. So just imagine how far it needs to fall, just to fall 50%. So that way, NBFCs are going to get into trouble. Even if the market tends to rally, they will still keep falling because, people are up to their necks, the mutual funds, the, HNI, the retail, everybody is in, so they need to get out, and that'll lead to more declines there.
Would Indiabulls be different? That company saw some bit of a recovery. So some such stocks offered buying opportunities?
See, the issue here is that, have the reasons for which they fell, have they changed? Like today we heard that possibly the growth is getting downgraded. So it need not be a solvency issue or some cash problem. Just the growth is getting downgraded.
Okay, all right. On that note, let's move on to our next headline, the third one for the day. Yes Bank saw a patch of green today. The stock ended its day 2, or the 2%, or it actually ended the day 2% in the green after the bank board asked the RBI to extend Rana Kapoor's tenure by at least 3 more months. Although brokerages are of the opinion that the central bank might not relent to this demand that's come in from the Yes Bank board. So 2% up nonetheless on a day like today. Well, let's get you one more query, and this is on Yes Bank. Karan has 300 shares. His buy price is 374. Ouch. So he's already obviously really hurting and reeling under losses. He's a medium-term investor, and he's been holding for a month. He wants to know what next. Prakash, this is really important. I mean, already taken a big hit.
A lot of people would be able to empathize with Karan's situation, and I do understand the dynamics have been like that. But it does not make... So yesterday when Yes Bank seemed promising because there was this extension that was being demanded or sought, and I don't think the RBI is going to be in a very great charitable mood to let them have that. Yes Bank cannot go down beyond, let's say, a 185, 175 zone in terms of valuation. I mean, it is a franchise. It's a significantly large book, quality. They've recovered loans from a lot of clients, borrowers from which other banks have suffered and struggled. So you've got to give it to them that they've been able to build a book. Now, whether the book continues to grow beyond Rana Kapoor's presence is a big question mark. Now, if you hire a professional team, and Rajat Monga and all have been around since the bank started, it's not, but I'm not saying that they are going to be going into the CEO's seat very easily. It could be somebody new, and that might take time. So you'll have to, again, give it time to correct to this 350 plus kind of zones. It may come back, there's no denying. But if you are a medium-term investor and you have a better opportunity, it makes sense to pull the plug, book your losses, and do something else with the money.
Yeah, because 374 is
it's a far target, yeah.
Okay, now let's plug out of equities for a bit. Because of the big event that has happened today, the 5-judge constitutional bench of the Supreme Court has upheld the constitutional validity of the Aadhaar Act, but the judgment came with certain riders. The court upheld Section 7 of the Aadhaar Act that deals with the grant of subsidies and welfare benefits. However, it struck down the linkage of Aadhaar with bank accounts and telecom services, deeming that unconstitutional. Let's listen to what the SBI chairman Rajneesh Kumar had to say, as well as the TRAI chairman.
Today, on our digital channels, if a customer wants, with an Aadhaar card, their account can be opened within 5 minutes and the account become operational. So the only thing which happens is that it is not mandatory, but having the customer's consent or voluntarily, it is still a very great convenience. And rest, whatever the Supreme Court judgment, everybody will have to honor.
These linking and seeding and other kinds of things, these are all application issues. See, as a fundamental digital identity infrastructure, if Aadhaar is upheld by the Honorable Supreme Court, that's a great news. And I am saying that as a person who has been involved in this project since the very beginning for the first 4 years of this project, I feel very happy personally.
All right, now it's time to take that mandatory commercial break, but do stay tuned. We'll be right back. Ashwini and Prakash continue to answer all of your stock questions and queries. Back in a moment. You're still with us on Markets Today Talk Back. Prakash Diwan and Ashwini Gujral are with us to decode the day's market action and to answer all of your stock questions and queries. Well, we've done the first 3 headlines of the day, so let's quickly move to the 4th one. IT stocks saw quite a bit of profit booking today, and the way for sugar stocks was also down. Almost all sugar majors ended the day over 4% in the red. This after the cabinet cleared new measures for the industry. The cabinet announced 5,500 crore rupees worth of assistance to mills that fulfill certain conditions. Remember, this is the second such package announced for the sugar industry. Manisha Gupta is here to decode all those details for us. Manisha, take us through the fine print.
Well, delayed but finally done, as the cabinet today has cleared the measures or approved measures for the sugar industry for the year 2018-19. You have seen an assistance of 5,500 crores come through in sense of measures, but the assistance will only come to those mills who will export sugar, who are eligible and who will fulfill all the conditions. So that clearly is the caveat coming in there. Apart from that, the money will be directly credited to the accounts of the farmers who will be exporting sugar, and this will of course help the mills clear the arrears which are piling up as dues to many of these farmers. Well, in sense of numbers then, as we have been telling you earlier, there are two kinds of subsidies where this money will be allocated. One is rupees 13.88 rupees per quintal, which will be on the cane crushed for the year, and the other is 1,000 to 3,000 rupees per quintal in sense of handling, freight, transportation, etc. is how the subsidy would be paid out. While the industry, of course, has been asking for more, applauding the actions that the government has been pushing out, but what they want right now is that even as export subsidy has come in, the export should be made mandatory. There should be a number which should be spread across mills, a quota should be assigned, and it should be ensured that the surplus sugar goes out of the country. The other is that as comes the crushing season from 1st of October, you will be looking at higher FRPs that the mills will have to pay as cane prices to the farmers. In accordance to that, what they're asking is that 29 rupees per kg as a minimum sale price for sugar, that should be hiked up in line with the FRP hike that the mills will have to, bear this year around. So these are a couple of things that the mills were still asking for, and is the reason that you saw sugar stocks go in for a bit of a profit taking as things came in line but slightly short of the expectations.
Okay, yes, asking an end price which is in line with their raw material price seems legitimate, but at the moment the sugar cycle is not being respected. It's not coinciding with the political economy cycle. Let's get a question in. Naveen Jha has written to us with a question on Ugar Sugar. He has been holding 2,000 shares of the company at 24 rupees, okay, for the last 9 months. He wants to know whether he should hold or sell. Okay, he's not bought it at a horribly expensive price, Prakash, but still...
higher than current market price.
Yeah, better than... It's higher, yeah. Now today it's 15, 16.
15, 16.
It had gone to a high of 40, 45,
yeah,
50
yeah,
a couple of years back. But at 24, should he be patient?
Yes. And I'll tell you, just to add to what Manisha mentioned, why is the disappointment? Morning when you started the session, sugar stocks were all flying. And this was because the UP cabinet had approved of certain benefits that would come. The central government, the cabinet has come up with a plan which is to incentivize exports. And that transportation range of 1,000 to 3,000 is because whoever is further off from the ports will get more. So it's just to be equitable. Now, there's no compulsion to export. And the biggest catch-22 for the government and for the industry is today, because of the glut that's expected in the next crushing season starting 1st October, sugar prices globally are coming down, anticipating the Indian glut. So we are actually bringing the price down globally.
Because
and then,
we are going to export.
And then exactly. And then you still want to incentivize exports. So, it's kind of working slightly against the grain. But having said that, the biggest benefit here I see is that 16,000 odd crores, which is pending to be paid off to the farmers. So any, company like Ugar, which is very proactive, which is very farmer friendly, would probably be a good bet to hold on to. So there are very few sugar companies which have demonstrated a symbiotic strategy going forward in terms of expansion and treating the farmers' arrears. Ugar, Dhampur, EID, Balrampur, stick with the good names. Don't go into those smaller ones, Mawana. There's so many of them. And they just fly because sugar is flying. And people actually don't want to do their diligence in terms of figuring out which benefits which way. So I think Ugar is good. I know it's a tough call, but he could probably hold on for some more time and maybe get about 20, 22, 24 rupees to start reviewing it.
Okay, so maybe it could turn a bit sweet. So be patient with Ugar Sugars. Last headline of the day then, let's quickly get to this one. Some of the stocks that made big moves today. Bharat Electronics was up 10% in trade after the management allayed investor concerns, saying that the company will maintain a 12 to 15% revenue growth rate for the next 3 years. Now, auto ancillary major Motherson Sumi, on the other hand, ended down about 2% after German automaker BMW lowered its full-year revenue as well as profit guidance. Remember, Motherson gets around 5% of its revenue from BMW. So, two different sides of the coin in terms of today's trading action. We have a query that's coming in from Amit Singh. This is a question, I think, on BEL. He has been holding shares since 500 shares of the company since the price of 118 rupees. He wants to know whether he should hold on or whether he should sell out. So, Ashwini, let me come to you on BEL. Now, the stock has seen a very big recovery today after an equally dramatic fall. I mean, fundamental cues stacking up positive today. Do you see this recovery continuing? What would you advise this investor?
See, the issue is I'm still waiting for 10,000 crores of orders. I mean, if it's going to take 4 years to do this, I mean, no investor has that kind of horizon. Yes, it can go up a couple of days and maybe go back towards, 95, 98. But I don't think it's a great investment case here.
Well, that's the reply to Amit. Gentlemen, thank you very much for joining us and taking all the questions of our viewers. Completely out of time. Thank you very much for watching this edition of Markets Today.